Welcome, everybody. Thank you for joining us today for Down Payment Programs 101. We want to talk about the basics of homebuyer programs, whether they're down payment assistance, closing cost help, tax credits, affordable first mortgages, and more, and give you the basics, tools, the data, the knowledge, the understanding of how to start conversations about down payments, about financing and pre-qualification in order to compel and incentivize buyers and especially renters to consider home ownership. So, uh, a little bit about us. Our core goal, our core mission is to help you connect home buyers to the down payment help that they need. Now, with me, I'm Sean Moss with Down Payment Resource. I oversee operations and customer support. And we also have our VP of Marketing, Tracy Shell, and our account manager, Fern White. Both of them are in the background. They're going to be answering questions here. So use the chat box, keep this interactive, and we're going to give you a lot of tools and knowledge and resources today to help you in your marketing and to help reach new buyers. So a little bit more about us. We covered our core mission here. We essentially track and monitor all of the homebuyer programs around the country. And we're going to look at those in a little bit more detail here shortly. But we work with MLSs, real estate agents, we work with loan officers, enterprise lenders, and so forth to help uh, incorporate down payment assistance information into listing data. And you'll see some of our MLS partners, and we'll talk a little about the benefits you get if you're a member of one of those MLSs. But we also work with loan officers and lenders, and all of this is built around helping provide you with the tools and resources and data that you need to be able to speak confidently to the fact that these programs are out there, but also to explore options on behalf of a new buyer or a potential buyer. So we're going to talk a little bit here about the most popular homebuyer assistance programs that are out there. Specifically, we're going to break down three categories: down payment assistance, affordable first mortgages, and tax credits. All of these are about expediting home ownership, helping potential buyers achieve the home ownership faster, cover the down payment requirements, cover closing costs, and get into a home sooner than they would have otherwise. In part because a lot of consumers don't know that these programs even exist, or they certainly aren't equipped, especially if you think of a first time home buyer, to navigate the nuances of various kinds of down payment assistance. So we want to step in and fill that knowledge gap and give you tools and opportunities to do so yourself, educate more buyers about the potential, about the possibilities, and help you sustain and grow your purchase pipeline. Now, as far as the programs themselves, there are many kinds of homebuyer assistance, and like I said, we're going to break that down into kind of three most common categories. But when we talk about homebuyer programs or home ownership assistance, down payment and closing cost help, even just that category alone, which we'll break down further, makes up the vast majority of homebuyer programs across the country. They come in many forms. Again, we'll break that down later. But there are a lot of affordable first mortgage options, typically from state and local housing finance agencies. And we'll look in a moment about the kinds of entities or organizations that provide these programs. But there are also a lot of tax credit programs out there, mortgage credit certificates. And these programs come from any number of agencies, entities, and so forth, and they're available everywhere. And that's important to remember. Every state has a state housing finance agency. They typically have a pretty broad or pretty dynamic array of programs, program types, and they're available statewide. But then cities and counties, and in fact, let's go ahead and cover that. Housing authorities, nonprofits, employers, community land trusts, community development departments, and so many more kinds of organizations provide and fund and administer so many kinds of homebuyer assistance. What we do is capture all of that information in one place and keep it current so that when you're working with a renter or a client, or you're trying to communicate opportunity to a new audience, you can break that down and basically tell them and personalize the experience and say, look, here are the options available for down payment assistance where you want to buy a home. Now, before I go any further, let's just kind of gauge the audience here. I mentioned earlier, we want to keep this interactive. So, Tracy, if we can launch a quick poll on the screen here, and let's just figure out what everybody's role is. Are you in real estate? Are you a loan officer? And when that poll is launched, you can click your answer right there on the screen. So we'll give you a few seconds to click your answer on the screen. Tell us if you're a real estate agent, a loan officer. Are you in sales or product leadership with a lender? Are you with an MLS on staff with an MLS or association or other? And looks like most of our audience has voted. So give them a couple more seconds here and then we'll share the results. Actually, looks like we have a 100% real estate agent audience today. So sometimes we get loan officers that hear about these webinars, and that's good because they're there to support you. But this really is geared towards real estate agents. So let's move on. So that helps us too, because we want to make sure that we cater to your needs, that we provide the data, the insights that you need. One way that we've been doing that is this coronavirus COVID pandemic has impacted DPAs, and we can't get into too much detail on this particular webinar because that's just not the topic for today. But to acknowledge where we are and to acknowledge the impact that this pandemic has had or is having on down payment assistance programs, we are tracking those updates. And if you go to our homepage, our public website at downpaymentresource.com, there's a link at the top to trends and changes and other things happening to homebuyer assistance programs and the agencies that provide them. Now, all that to say, DPAs aren't gone. They're not going away. Some pricing options have changed. Everybody's working remotely, so that might slow things down a little bit, but that's for everybody across the board. So we will keep you updated there. We'll provide a link when we follow up from this webinar. And you can go to our website at downpaymentresource.com and click on the COVID link at the top of the page. And we'll keep you informed of changes as they occur to housing finance agencies, DPA providers, programs, overlays, specific guidelines, and things like that. So we're doing all that on top of just regular keeping up with what's going on in the down payment assistance world. So a little bit more about what's happening now. We do want to address this, but we're not going to spend the entire webinar on this. And then we're going to break down, the three most common, most popular types of homebuyer programs. But all state housing finance agencies are currently open for business and accepting reservations, all of them. Now, there have been suspensions of certain product types or pricing options, but they all are still open. They're still offering mortgage. They're still offering down payment assistance, and we're tracking the changes to those programs. But it's important to know that's the state housing finance agency. Their programs cover the entire state. They are all open. Cities, counties, nonprofits, their programs are still widely available. Now, funding for those programs has always been and will always be seasonal. So that's a factor to consider. That's not the impact of this pandemic. However, there are some local entities that are perhaps pausing applications until we get through this. We'll see. We're tracking it. This is a very fluid situation. Homebuyer education, as you can imagine, has effectively moved entirely online. And there have always been increasingly more homebuyer education options online. What that means, though, is that some programs that would require an in-person class, maybe they suspend the class, or maybe they are opening up to online options. We provide information about homebuyer education requirements in program details for you guys when you're using our system or our tools, our website. These agencies are also, as quickly as they can, reacting to changes from Fannie Mae, Freddie Mac, FHA, and so forth. And we're tracking those as well. And we'll see what happens with some of the more lender-specific topics, but we're monitoring all that. So we wanted to at least let you know that most DPA providers are open, accepting applications. They're having to adjust based on changes coming out of DC for some product and pricing options. But we're still, business as usual to some extent, if that's even fair to say right now. All right, so let's take a moment here to consider where we were coming into this pandemic. We were looking at an increase in awareness and usage of down payment assistance programs going back several years. And in fact, this survey here is from earlier this year, and it was a survey of potential home buyers asking where did they plan to get their down payment? Where did they plan to secure or accrue their down payment from what source? And the second most popular answer was homebuyer assistance programs. So, we've been at work at Down Payment Resource for 12 years trying to build awareness of these programs, trying to expand awareness of these programs, trying to educate consumers, real estate professionals, lenders, and so forth that they're out there and how to use them and why to use them and when to use them. Home buyers are catching on now, and that's what we've always hoped for, is that they become aware of all of the options that are out there that can help expedite home ownership, make it possible, keep it responsible, and move them forward. So, keeping that in mind, here we are now with an awkward situation. Nonetheless, let's take a look at what the most common requirements are for all DPAs and then break down the three most popular kinds of DPA programs or homebuyer assistance programs and make sure that we're all equipped to go have a conversation. At some point we sort of we come out of this, we're looking at a purchase market. Is there going to be pent up demand? Is there going to be a wave of listings hitting the market? We don't know. I'm not an economist. I'm not going to make any conjectures here. We just want to make sure that we're talking about a topic that we believe is going to be a hot topic, an important topic, and one that we should all understand and be prepared to have conversations about. And that's helping with the down payment. So, with that, sort of universal requirements across all home buyer assistance. They're only for owner-occupant buyers. This isn't down payment assistance to buy your vacation home or to buy an investment property. These are for owner-occupant buyers purchasing their primary residence. They do all still require a minimum buyer investment. Now, we hear all the time from survey after survey, study after study, that a lot of consumers, especially the younger they are, the more down payment they think they need to even consider home ownership. It's staggering how many prospective home buyers still think they need 15% or 20% down to buy a home, period. Like flat out, they think that's the rule. And we all know that's not true. VA, zero down if you've got a military background. USDA, buying a rural property, potentially 0% down payment. FHA, 3.5% down. Conventional, there are 3%, 5% down payment options. So we know it's just not true that you need 20% down, but we have to combat that misperception because that's what a lot of potential home buyers actually believe. Now, another universal requirement is most of these programs do require the completion of a homebuyer education course. Increasingly, that can be done online. Recently, it's almost exclusively done online. And of course, all of these down payment assistance programs are obviously not for cash buyers, so the buyer has to qualify for a first mortgage. Those are just sort of inherent requirements for homebuyer assistance. If we just lump all of those programs together in one broad category, these requirements are pretty much universal. Now, what we're going to do is we're going to take the three categories I mentioned earlier: down payment assistance, which is the at closing help; affordable first mortgages, which are unique and advantageous or beneficial first mortgage options that can be coupled with down payment assistance programs. And then we're going to look at mortgage credit certificates, which are tax credits. We're going to break those down and just give you some detail about those because they're the most common types of homebuyer assistance that you're going to see across the country, across your market, and available across your prospect and your client base. Now, before we do that, let's launch another poll real quick. Can you tell us, and we'll launch this on the screen, how recently have you used a down payment assistance program with a client? Maybe in the last month, maybe this year, maybe it's been a while. But again, just to get a feel for our audience, and Tracy, if you can launch that on the screen here, tell us how recently have you worked with a client who took advantage of or who used a down payment assistance program? And again, you can click your answer on the screen. We're halfway through April, so if you've done one this month, then good for you. You're probably doing these pretty frequently. We're also pretty early in the year, so if you've done that this year, then again, you're probably doing it pretty frequently. But we always find when we ask this question that it's been a while for some people, and that's fine. But the goal, and let's share the results on the screen. So this is a pretty standard spread here. The reason we ask this question is because we get a lot of people joining this webinar that were not really aware of down payment assistance programs or hadn't worked with any of them in a while. Maybe their lender partners didn't really talk about it, or the conversation never came up. There can be a lot of reasons why it's been a while, or you've never worked with a client who used the down payment assistance program. What we want to drive home today is that there are so many opportunities out there for more and new buyers, and providing information about these programs, quite honestly, whether or not that buyer ends up qualifying or using that program, puts you in a position of being of additional value, because you're opening up more opportunities and new opportunities. You're educating those prospective buyers about topics and possibilities they didn't know about. So, we even hear sometimes, and Tracy, we can take that off the screen. Thank you. We even hear sometimes that, a buyer will come to an agent because they found out about down payment assistance programs. They talked through it. They explored their options. They worked with your loan officer partner. Maybe they made too much money. The property was too expensive, or for whatever reason, they didn't qualify, but they still close. And then they refer people, because opening up the door to all of the options that are out there, a true, full, holistic education about down payment opportunities, that's a value add, and people remember that, whether or not they got to use the program. So, with that, let's dive into down payment assistance programs themselves. The first of these three categories, and let's just talk about what that means. Now, it can mean a lot of things in this particular case, but down payment assistance, as we saw earlier, is the most common type of homeownership program. It does, however, encompass a lot of different names, repayment terms, program types, and so forth. So most of these are funded through either nonprofit or government funding sources. Sometimes we see employer assisted housing programs where an employer, in order to recruit or retain talent, will provide a down payment assistance program to eligible employees. But on the whole, whether it's a grant, whether it's a repayable second mortgage, whether it's deferred payment second mortgage, or even a forgivable second, all of them offer, a couple thousand to tens of thousands of dollars in at closing help. And that's the key here, is these funds are sent to the closing table to supplement the down payment. And we'll get into the difference between repayable and deferred and forgivable seconds versus grants down the road here. But all of these are at closing assistance. They can be used obviously for down payment, most of the time for closing costs, sometimes for prepaid expenses, and sometimes even for property repairs to, for example, do some basic property repair to bring a property up to market ready, or to make it conform to FHA loan standards or something like that. Sometimes these programs can be used for those purposes. Now, one common misperception among consumers and others is that these programs are only for first-time home buyers, and that's not true. A lot of them are. That part is absolutely true. But 41% of the programs, when we last took count, and we do this several times a year, 41% of the programs in our system do not have a first-time homebuyer requirement, meaning they are available to not just first-time homebuyers, but repeat buyers, current owners, boomerang buyers. And that's a term from the last recession, but it's something to think about. People that went through housing issues, foreclosure, short sale, something like that, and then come back around, repair their credit, get ready for the market again. All of those people are eligible for a program if it doesn't have a first-time home buyer requirement. And on top of that, it's also very important to remember that the definition of a first-time home buyer pretty much universally, pretty much universally across all of these programs is simply someone who has not owned a home in the last 3 years. So if they owned a home 5 years ago and sold it, they're a first-time home buyer for the purpose of down payment assistance anyways. So I mentioned earlier, there are a lot of different kinds of down payment assistance. Yes, there are grants. Those are programs that are a true gift at closing. Do not create a second lien. There's no subordinate loan. There's no repayment. That's one scenario. There are, however, all manner of varying repayment terms for other kinds of down payment assistance programs. Some of them are a second mortgage that is repayable and repayment begins immediately. Some of them are second mortgages with deferred payments. So maybe you get $10,000 in down payment assistance. The payments on that $10,000 are deferred for maybe the life of your first mortgage. And then you only pay back the down payment assistance years down the road when you sell the home, usually with zero interest. And then some of those are forgivable. So an example there would be you purchase the home, you get $10,000 upfront in down payment assistance, and each year for the next 5 years, $2,000 are forgiven. So after 5 years, the debt is gone, the second lien is gone, and that $10,000 immediately accrues as equity in the property, and it's not due back to anyone. So those are a couple of different scenarios, but all that to say, down payment assistance or DPA or DAP, those are pretty broad terms, and they compile together a lot of different kinds of program types and repayment options and so forth. Eligibility includes income limits. Many of these programs have income limits up to which a borrower or household may be eligible, beyond which they may not be eligible for that particular program. Now, those income limits can be surprisingly flexible, surprisingly high. We commonly see, 100% of the area median, which is the average in that market, could be the income limit. We've seen up to 120, 140, 140% of the area median or average income, and sometimes even higher. And there are some programs that just don't have income limits, but by and large, most do. Same thing with sales price limits. They're higher in higher cost markets because the median prices and the median incomes are higher in those markets. So coastal markets, urban markets, and so forth, you're going to see higher income limits and higher sales price limits. Location also matters. Where does your client want to purchase a home? If they want to purchase a home in an exurban or rural area, there may be fewer local options, but the State Housing Finance Agency provides options, and USDA loans are on the table. If you're in a bigger city, you're going to have more municipalities, you're going to have more nonprofits, you're going to have more HUD funds pumped in through various sources. And so location makes a big difference. Just as well, crossing county boundaries or city boundaries from one city into another as your clients navigate where they want to live and properties that they like, crossing county or city boundaries can impact the programs that are available to them. There may be program A in county one, but if they look at a property a couple miles away, then county two may have program B. So a whole different set of opportunities arises. FICO and credit in general are important requirements. Most of these programs have a minimum of 620, 640 as a FICO score. Credit, of course, they have to qualify for a first mortgage. So that basically is the credit qualifying for the DPA as well. Home ownership history, we covered that. That just means, is there a first-time home buyer requirement? If there isn't, then repeat buyers may be eligible for these programs. But for you, that's an entirely new audience that you can discuss these options with. Military service makes a big difference. A lot of DPAs around the country will waive the first-time homebuyer requirement for those who are either serving currently or are veterans and have served in the military in the past. In part because of the sometimes transient nature of military service, a lot of these programs choose not to penalize members of the military for having to move around a lot based on their orders. So likewise, profession can also make a difference. There are some programs, some markets where there are additional programs or unique benefits for people that work in certain professions, healthcare, first responders, law enforcement, and so forth. So it's worth checking. That doesn't mean there's a program for police officers in every market, but there may be in yours. And we track all of that. Now, what are the advantages of down payment assistance? And again, we're trying to give you the basics, the high level stuff here so that you can confidently start conversations about financing requirements, about down payments, about the opportunities that are out there, and collaborate with your loan officer partners, because that's the most common question we get. Who do I work with? Who's going to help me? Your loan officer, the one, especially the ones that work with these down payment assistance programs. So, what are the advantages? Lowering the loan to value. So basically, if your buyer has 3.5% to cover their FHA down payment, but a down payment assistance program can get them another $5 or $10 or $15,000, they could get a better first mortgage with lower mortgage insurance and a lower monthly payment and lower debt to income ratios, which is DTI here, lower debt to income. All of those improve mortgage pricing for the interest rate pricing, as well as mortgage insurance pricing, which compounds the lowering of monthly payments. And if we think about equity versus liquidity, for example, what's better? Is it better for a new home buyer to move into a house having just used all of the liquid cash they had for a down payment, and now they're stuck with no budget for emergencies, no budget for the inherent costs of home ownership? You just moved in, you never had a lawn, you never had a lawn mower, things like that. Or is it better to leverage a down payment assistance program and keep some of that liquidity, keep some of that money in your savings, use the down payment assistance program to move into the home, and then you've got cash reserves for the inevitable and immediate costs of home ownership? We actually saw a study last year from Chase that looked specifically at the impact of liquidity versus equity. And basically, when you get a buyer moving into a home with 2 to 3 months cash reserves, getting them that far instead of having 0 or 1 month of cash reserves for covering their payments, that makes an enormous impact on longer term default rates. Just having that cash up front, getting them through a couple of months without having to face emergencies and not having any cash, makes a huge difference for the long term success of a home buyer now turned homeowner. And of course, all of that increases their purchasing power, the purchasing power of their income. Now, homebuyer education, we've mentioned this earlier. It is often required, typically from a HUD certified source. There are many, increasingly more online options, but we are big proponents at Down Payment Resource of the idea of homebuyer education, because it isn't just preparing successful home buyers. That's an event. Successful home owners, that's a long-term strategy. And a lot of the content of these homebuyer education courses that are required are aimed at understanding the transaction, the purchase, but also planning for, budgeting for, preparing for successful long-term home ownership. And we've seen study after study over the years quantifying the impact that homebuyer education has on long-term success, and it's notable. All right, so that's all down payment assistance, right? That's the at closing help with down payment, closing costs, prepaids, things like that. A lot of variation there, some sort of universal guidelines and some universal benefits. But now we're going to move on to the second category. We looked at all the DPA content. Let's look now at affordable first mortgages. But before we do that, let's put another poll up on the screen and tell us, how often do you work with a first-time home buyer? So we already asked you how often you've worked with a buyer who used a down payment program, but now tell us, how often do you actually work with first-time home buyers? Is that your exclusive audience? Is that an audience that you work with frequently because you're actively marketing to them? Or maybe you're not actively marketing to first-time homebuyers, but work with them occasionally on a referral basis because your clients in a sort of different sector of the market refer first-time homebuyers to you. Let's see, I'll give you a couple more seconds to vote. Looks like about 2/3 of you have voted. But again, this is just a gauge. When we think about our audience, all of you are real estate agents. Some of you have had recent experience with a client who used a down payment assistance program, but this spread is different from our last question, and this is why we ask. Maybe you haven't used a down payment assistance program recently, but more than half of you work frequently or even exclusively with first-time homebuyers. Now, far less than half of you had used a down payment assistance program with a client recently. So what we want to make sure you know of and have access to is that these programs are out there. Understand the benefits of them. We'll connect you, or we'll show you how to connect with the people that can help you through this process of educating yourself, marketing to new audiences, capturing their attention, engaging with them, and so forth. So this sort of quantifies why we ask this question. Maybe the DPA history isn't there, but the first time homebuyer client base is, and we want to address the needs that they face. We all hear all the time for years now, two of the biggest obstacles to home ownership, student loans, down payment, right? So let's solve for one of those, and maybe it helps solve for the other. All right, so thank you for that. Now let's break down affordable first mortgages. What does that mean? Now we're not talking about down payment assistance. We're talking about the first mortgage options that typically come from state housing finance agencies or local housing finance agencies. Now, those aren't municipal entities. Uh, they're not nonprofits necessarily. But anyway, the first mortgage options they provide are meant to be combined with their down payment assistance programs, can often be layered with some of the other DPAs we just thought about and talked about. You can often layer a city or a county down payment assistance program with your state housing finance agency. Now, of course, that's three different parties, three different transactions. It can get a little complicated, but that's not really the point. The point isn't to complicate things and look for five different DPAs on one loan. We've seen it done. Sure, it can happen. But the point is, housing finance agencies offer some pretty unique first mortgage options that are not necessarily or always available outside of the housing finance agency. That can include below market interest rates, expanded first mortgage options, reduced mortgage insurance costs, or reduced mortgage insurance, more mortgage insurance options to reduce the overall cost of mortgage insurance. And then, of course, combining those mortgages with down payment assistance, either as deferred loans, forgivable loans, sometimes grants. And another benefit that sometimes opens up is the addition of a mortgage credit certificate with that first mortgage and or down payment assistance option. So you can sort of compound the benefits again here by exploring state housing finance agency programs. And some of the advantages are reduced buying costs. The cheaper the mortgage, the lower the rate, the lower the mortgage insurance costs, then the lower the monthly payment, the lower the buying cost, all of which again increases the purchasing power of your client's income. Their income's not going to change, presumably, as they go through this home ownership journey for 3 months, 6 months, however long it takes from calling you to closing. But every little benefit you can tack on to the mortgage, the down payment, the equity, the liquidity, it all increases the purchasing power and reduces the buying costs for that client and expedites home ownership. And that's the thing. It's not necessary. We're not just saying, let's make it faster for the people you're already working with. What we're saying is, think of the tens of thousands of millennial renters who are renewing leases but are income qualified and credit qualified to purchase a home. They just don't know what the down payment requirements are, or they believe they have to have 20% down and nobody's telling them otherwise. That's who we're saying to go expedite home ownership for. Get in front of them, get them that message, educate them about what's possible now and the help that's out there. Get them in your wheelhouse. Get your content in front of them, introduce them to your loan officer partners, work together on a first-time homebuyer strategy, and get these people pre-qualified. And sure, we don't have 10 million listings across the country to sell them, but we can cultivate a qualified pipeline, and educating them about down payment requirements and combating misperceptions is a wonderful way to be doing that, especially now with everyone remote, a little more time to explore online, think about the future, and so forth. All right, now we're going to dive into mortgage credit certificates last. That's the third of the three categories of programs we wanted to break down for you. So we're going to dive in here. Before we do that, one last question. Tracy, if you can add the one last poll, tell us how much you spend marketing to first-time homebuyers annually. So think of it on annual terms. And we're not trying to get into your budget. We're again trying to understand our audience and think about ways that we can reduce the cost of marketing or increase the reach of our marketing spend by weaving the right message into that marketing, by resolving for the right problems that these clients might face. So how much do you spend annually? Dozens of dollars. You've got a couple little tools here and there. Are you spending hundreds of dollars? Maybe some of that is lead buying. Thousands. Maybe if you're a bigger team, and maybe you spend nothing. Maybe it's all organic. It's all social. It's all just creative content, copy, graphics, calls to action, and so forth. So let's see, couple more votes there. Okay, so this is more like the last question we asked, right? Sort of, kind of getting there. But the spread, I mean, is more representative of the last question that we asked. Some of you are spending dozens of dollars annually to market to first-time home buyers. Some of you are spending a little more than that, hundreds of dollars. There are some of you, I presume, who market exclusively or obviously aggressively to first-time home buyers that are spending thousands of dollars annually. And then some of you aren't spending anything. So we're just asking the question, honestly, to pose another one. Who are you reaching? At what frequency? With what success rate, i.e., conversions? And are you talking about down payment? Are you educating them about down payment requirements? Are you bringing up the topic of down payment assistance? And if you are and it's working, great. If you're not and don't want to, that's fine too. We're just saying we think you can supplement those messages with the topics that you're hearing today and attract more attention, build more trust, engage more people, and grow your pipeline. That's our goal here. That's our motive, is to help you do exactly that. All right, so let's break down this last category of home buyer assistance programs. We looked at DPAs, down payment assistance. We looked at affordable first mortgages from housing finance agencies. Now let's look at mortgage credit certificates. What does that mean? Quite simply, a mortgage credit certificate is a federal income tax credit. Now that's different from the standard mortgage interest deduction that any home buyer takes on their federal income taxes, although even those numbers have changed in the last couple of years. So a tax credit is a dollar for dollar offset of mortgage interest cost. A credit essentially reduces your tax bill dollar for dollar based on the amount of the tax credit, whereas a mortgage interest deduction is reducing the amount of your taxable income. And I'm going to leave the tax lesson at that, but suffice it to say, anyone eligible for a tax credit will always take that over a deduction. It's just a dollar for dollar, more beneficial feature of a tax return. So that said, mortgage credit certificates mostly come from state housing finance agencies, but in some markets there are local housing finance agencies or other entities that might offer one. But it is good every year for the life of the mortgage that it is tied to. So you get a mortgage with that entity. You get a mortgage credit certificate from them as well. That mortgage credit certificate allows you to get up to a $2,000 federal income tax credit based on the amount of interest paid for every single year, so long as you have that same first mortgage. If you refinance, sometimes you can carry it over down the road. If you sell the house, then the mortgage credit certificate ceases to benefit you anymore. But it's a great way to provide ongoing benefit. It's a great way to provide life of loan value. And again, it's a great way to build trust and to build referral trust, essentially, among your client base and their peer network. So I kind of covered these, but the benefits of mortgage credit certificates: reducing income tax liability. That's obviously a huge benefit. Every year when they file their taxes, if they have a mortgage credit certificate, they get to claim a tax credit for up to $2,000. And that's based on a percent of mortgage interest paid. I'm going to run you through an example here in just a moment. Sometimes the tax savings can be can enable the opportunity to recalculate the income. So essentially, you take the tax credit, you annualize it, and you increase qualifying income by that much. Not everyone allows it, but some do. So when we talk about increasing purchasing power, The income didn't change, but the tax benefit increased their qualifying income. And some mortgage credit certificates can be reissued through a refinance with the same organization that originally issued it. Not all, but when available, that allows you to carry that benefit over to the next mortgage and on into the future for more years to come. Now, here's a basic example of how a mortgage credit certificate works. You file your taxes, you look at your mortgage statement, and you look at how much interest you paid. So let's take an example of a $200,000 home paying 4% interest on the first mortgage. They will have paid $8,000 in interest in the first year. If the mortgage credit certificate allows them to take a credit for 25% of the mortgage interest paid, then that's a $2,000 tax credit. Now, some mortgage credit certificates will allow you to take will allow a credit of 30 or 35 or 40% of the mortgage interest paid. The IRS caps the tax credit at $2,000, except for some circumstances where you could actually get a larger tax credit. But generally speaking, the IRS limit is a $2,000 tax credit. So then the question is, what do you do with the rest of the interest that you paid? Well, you can still claim it as a deduction. So that's a quick example of how an MCC works. Now, I want to take a moment here to kind of re-engage. If you've worked with the DPA recently, if you've worked with a buyer who utilized the down payment assistance program, if you're actively, aggressively marketing to first-time home buyers, share an insight with us. Use the comment box, ask questions, tell us a story. We love to hear those stories, and we're happy to share a few if we get them. But those often lead to good practices, best practices we can share with others that we can maybe even share yours, depending on how that the story plays out and so forth. But we would love to share your success stories too. Whether or not you use down payment resource, we just want to know if you're having success working with first-time home buyers, who are your best partners, and so forth. So be interactive, share your thoughts in the comments here. And I want to talk about a few unique features and benefits of home buyer assistance programs. So we broke down down payment assistance. We broke down affordable first mortgages. We broke down mortgage credit certificates, and we looked at the details and the nuances and the benefits and the qualifying criteria. There are some unique outlier scenarios where additional opportunity may arise. So we want to make you aware of those as well. Targeted areas is the first one. These are typically areas of increased foreclosure, need for reinvestment, rehabilitation of properties. Targeted areas can be defined a lot of ways: by county, by city, by zip code, by census tract, and for a number of reasons. However, what's important to know is that, especially with state housing finance agencies and sometimes with local programs, there may be additional benefits for buyers who purchase a home within those targeted areas. And again, the targeted areas can be pretty broad, pretty wide geographically. The most common benefits in targeted areas are no first-time homebuyer requirement. Even if that same program would otherwise require you to be a first-time homebuyer, often that requirement is waived in a targeted area. The idea is to incentivize owner-occupied purchase and investment in primary residences in that targeted area, right? More down payment assistance money may be available to a person who's purchasing a home in a targeted area. You will also often see higher income limits and higher sales price limits for properties purchased in targeted areas. All of those amount to yet more opportunity for yet more buyers, and especially if you think about core service providers, educators, first responders. The idea of live where you work, help them incentivize them to be able to afford to live where they work, reduce commute times, increase quality of life. A lot of that is weaved into the idea of targeted areas and the incentives that they can provide. Likewise, I mentioned earlier, targeted professions there may be unique opportunities out there for people in certain professions. There are some programs, hero programs, veteran programs, police programs, teacher programs. They're not in every market. Not every market has one. But two things. One, A nurse can qualify for everything that anyone else can, right? A teacher can qualify for every program that anyone else can. They're not precluded from using just a regular DPA just because of their profession. What we're saying is there are some markets where there are additional unique programs specifically designed for first responders, law enforcement, educators, and so forth. And where those programs exist, it's another important layer of opportunity and another opportunity for you to start a conversation with people in that profession, or build referral relationships with people that can refer you potential clients that work in those professions. So keep that in mind. We track all that data. You can find information about programs in your area any number of ways. We'll talk about a few of those here shortly. Military background. I pretty much covered this earlier, but it's also important to remember there are programs out there that are just for those with active or previous military service. An example is the PenFed Foundation Dreammakers Grant. They offer a 2-to-1 match as a grant to help cover closing costs for veterans, and they'll match up to $5,000. Now, a lot of people say, well, they can get a VA loan. That's a zero down program. It is, but they have closing costs, and often they'll ask the seller to pay them. You can create a more competitive offer, a more attractive offer for the seller if your client has a military background and has their closing costs covered by a program like that. So with that, how can you access down payment information? That's where we want to end with this. We want to show you how to access this information, different ways that you are provided with this or can access information about down payment assistance, tax credits, everything we've talked about today. First option, go to downpaymentresource.com. Anybody can do a search there. You can figure out what's available in your market. You can see some detail about the programs. You can subscribe to our newsletter and get more information that way. So that's one option. Go to downpaymentresource.com, send your client there. You can go there on their behalf, see what's out there, get a feel for the program opportunities, start the dialogue with your loan officers, with your prospect base, your marketing team, your referral partners, and so forth. If you are in California, we have a unique partnership with the California Association of Realtors where we provide yet more program detail. If you go to downpayment.car.org, if you are a member of the California Association of Realtors, you have more program details and some marketing tools. That's your login site. You can send your clients, or you can do a search yourself also at finddownpayment.car.org. So if you're in California, we encourage you to go there. You can see some more detail about the programs in your market. Now, we have partnerships with MLSs around the country. If your MLS is on this screen, you have another important tool called Down Payment Connect. You also have DPA data integrated into your listing database. So when you're looking at agent or client listing reports, you will see a down payment button on eligible properties, only those that are eligible. And when you click that, it will tell you which programs are available for that property given its location and its list price. And so we have other webinars dedicated to that. But nonetheless, if your MLS is listed here and you are a member of one of these MLSs, you have DPA data built into your listing database already, and you have Down Payment Connect for free. What is Down Payment Connect? Well, I'll show you in just a moment. Here's what you'll see on listings if one of those MLSs is your MLS. Go to your MLS system, look for the down payment button. Looks like this in different workflows. That's what you'll see inside the MLS when you're looking at listings. And then Down Payment Connect, that is a personalized lead gen landing page for you and your clients to engage and learn about down payment assistance. It's essentially a page you can put out in social media, email marketing, on your website. It gives you the opportunity to present a down payment assistance search to consumers, let them search, see enough information to compel them to reach out to you, but not all the details of all these DPAs. Reach out to you, you get leads, and that's all for free if, I'll go back, one of these MLSs, if you belong to one of these MLSs. Now, what if you don't? we still offer Down Payment Connect to real estate agents elsewhere around the country. If you are a member of one of those MLSs I just showed you, don't pay for it. You already have it. If you're not a member of one of those MLSs, we're happy to extend that opportunity to you as well. It's a great marketing tool. It's a great way to attract attention, educate buyers, get DPA info out there, and give yourself a way to supplement your marketing and lead gen efforts in order to engage with those buyers. So this is a little more about Down Payment Connect, but if you want to subscribe to that, you can go to that page. If you want to learn more about what everyone else is doing with first-time home buyers around the country, we have over 6,000 mostly real estate agent members of our Down Payment Insiders group. The URL here is down at the bottom of the page. Tracy, who is on with us and doing the polls, she curates this group and keeps the conversation going. We very commonly see creative new best practices, creative ideas for engaging and educating clients. So we encourage you to join that group as well and just hear from others in other markets around the country. How are they reacting to the pandemic? How are they marketing? How are they sustaining their business virtually? What are some things they've learned working with down payment assistance programs, loan officers that do or don't do these programs, working with buyers who use the programs, educating buyers that didn't know about the programs, all of that. It's all covered. They've been together for a couple years now. This group grows and shares more ideas. It's a great place for you to kind of become part of a community and at least listen in, if not share your ideas as well. So here's our contact information. If you want to see more data, you can go to downpaymentresource.com/reports. And then, of course, if you wanted to take a look at Down Payment Connect, if you are not a member of one of our MLS partners, then you can go to downpaymentresource.com/DPC. Okay, so Tracy, let's open up Q&A here. We still have a few minutes left. And let me know if there's any common questions we're getting. We got about 6 or 7 minutes left here.
Great. Thanks, Sean. And thanks, everyone, for all your questions. Fern and I have been answering some questions in the background. We're going to go through as many as we can.